All right, so welcome to another video. And in this episode, what I want to share with you is 4 reasons why moving averages is one of the best indicators out there. Now, I'm not saying it is the best indicator because best for you might not be best for me. But I'd say it's quite a good indicator for people to getting started or just in general to use because there's a lot of reasons behind it. And that's what we're going to cover in this video. In general, what you want to remember is that most indicators, they stem from price and volume. The basics behind a lot of them is price and volume, and moving average is no different. But if you understand to read price and volume, you don't really need to use a lot of indicators, but a moving average can kind of help see and spot some of those things easier. What you don't really want to do is have 14 indicators on screen and then not knowing when to get in and when to get out. So let's take a look at some of these things. But before we do, I just want to show you just even here VWAP, for example, it's a volume weighted average price and volume. That's an indicator. It stems from price and volume. If you look at here, MACD, again, we're looking at the SMA, simple moving average, exponential moving average, and so on. So again, that's part of the indicator. So again, a lot of these things stem from that. So as we go ahead and take a look at here a moving average, here's what I've got a moving average of right here. When we look at this, it averages the price. So it goes ahead and averages, in this case, this is a 21 period moving average. It goes ahead and averages the 21 last period. In this case, it's going to be the daily, and plots a point because price is constantly wiggling. So we go ahead, calculate that, plot a point, calculate it, plot a point, plot a point, plot a point, plot a point. And if you actually switch this to instead of a line, we're going to do dots. That's what it's doing. It's really just plotting some dots here on screen. And that's creating kind of the moving average. Okay. So as we look to reason number one of the reasons I like this indicator is it's a simple indicator to understand. So for people just getting started, this makes it very easy. You don't have to go with complicated indicators. You can just use this one. And by looking at it, you can change these moving averages from a 21 to, let's say I go ahead and switch it to a 55. And now that indicator has changed. Or I could switch it to an 89 and you can see it changes, or an 11 and you can see it follows the price more closely. So if I do 21, there it is. Okay, so point being is it's a simple indicator to understand and work through. Okay, if we go to reason number 2, when we look at something like this, it can give you really clean and clear entry and exit signals, which I find for a lot of people, they just don't know when to get in and when to get out. They don't know when to pull the trigger because they have like 12 indicators on screen or even 3 indicators. Well, I'm looking at the volume, I'm looking at the price, I'm looking at also MACD and RSI and stochastics and all these divergences. That can get convoluted. So if you're hitting 3 out of 7, do you go in? Or if you're hitting 2 out of 7, do you go in? So that makes it more difficult. Whereas when you look at this indicator right here, it just simplifies things. Okay, for a lot of people starting out, I say, well, just look at it. Okay, look at it and see, is it above it or below it? Are you bullish or bearish? You're getting in or getting out? And if we switch back to kind of a line, and I'm going to go ahead and switch this to, let's make it yellow so you can kind of see it, and I'll make it a little thicker. And we'll go to a standard line. Okay, so now what you can see is if it's above it, you get in. So in this case, you would go ahead and get into the position, and then if it breaks below it, you get out. Okay, so if you look at this and we color code it, one of the easier ways I like doing it is to just take a look here, and we would just go ahead and do a color code here. So we would choose a condition, and I would do an EMA. Let's say here, exponential moving average. So we'll go in moving average exponential, and then we'll do this one as and what I'm doing is really just lining up the same indicator, greater than, or really condition is it's above that moving average. Okay, and when it's above it, we will go ahead and color code it white. So now there's my entry and there's my exit signals. So anytime it is above, I'm getting in, then I'm out. I'm getting in, riding, maybe getting out. Getting in, getting out, getting in, getting out. So that was like a lot of break evens. Getting in here, getting out there. Getting in here, getting out there. Getting in, right there. We're getting out maybe sometime soon. So what this allows you to do is kind of look at that indicator, and you can change that. So it makes it kind of simple and easy for an entry and exit signal. The other thing it can do is give you a level of support or resistance. So if you're just kind of not using it as entry or exit, what you'll find is even in here, we're holding this kind of like as support. It comes down into it, and it might hold the support, comes down into it, holds a little support. Okay, comes up, goes support, and pops. Because what prices are doing, and they're constantly fluctuating, they're coming into support or out of support, or coming into resistance or out of resistance. And you can take any other stock in the same way. Let's just say we take a look at Costco here. We'll delete this drawing, we'll delete this drawing. So as we look at this indicator here, what you'll find is that stocks are coming out of it, and then they're coming down into this indicator, and then they're coming in as kind of support. So that's pretty cool. And that's what they're doing, is they're kind of going in. Here's a nice example. It doesn't always happen, but here, look, we went in, we're in the position, comes down, you're holding support, goes up, comes down, holding support, goes up, holding support, comes down, holding a little support, and then breaking through. So point being is you're getting into the position, holding it, holding it, holding it, and then getting out clear signals and so on. So again, nice, easy, simple, and to the point. If you look at this from a monthly chart or even a weekly chart, let's do monthly chart. You can see how that line actually stems very well or holds very well. So that support over multiple years is actually holding, with the exception of that one bar. So if you're using it on a monthly basis, you just get into the stock, you're holding it. Oh, there's the bar. Oh, you got out 3 years later. So makes it really nice. Okay, now point number 4 is you can analyze multiple time frames in one view. And this is really cool. So if we go in, and I will just switch back to, instead of color coding the price, what you can have is I've got an exponential moving average 21 day or 21 bar. We're going to switch to a daily. And then what I can add here is another moving average, and I will do kind of a red one here. And this moving average is an 89. So I've got a 21 and an 89. So what this allows me to do is we have multiple time frames. Okay, so we've got multiple time frames that we can look at very quickly. For a lot of other things, you have to look at, 3 charts or 3 graphs to be able to see it. But if I look at Adobe right here, so look, the longer term is the longer term kind of moving up. Yeah, it is. In the shorter term, yeah, it is. So both of them, long term and short term, is moving to the upside. So that's good news. That's positive. The stock's bullish. So that's where they use the crossover concept. When it's crossing over and both of them are above, that's great. If they're kind of just wiggling around close to each other, like here, then yeah, you don't have to deal with it or play with it. But once that one is above this one, now you have a potential to get into the stock. And once it breaks below, then you shouldn't be in the stock. So that's another way to kind of use it. But point being is you can set this up as well to color code these things, where now, you go into the stock whenever one is above the other. So you can go in right here. So you can see where that moving average, okay, the shorter term 21 day is, or 21 exponential moving average right here, is above the other one. And you hold it, hold it, hold it all the way, up until maybe they cross over all the way over here, somewhere on this right side. So that would be kind of your exit point. So again, a nice other way to use shorter term and longer term to kind of spot what is happening and going on. So that's what makes it very nice. So these 4 points I find are really good and great. Let me know what your thoughts are on this indicator. Do you like it? Do you use it? Write down in the comments below, just like many of these other people. Write down in the comments below what your thoughts are on this indicator. And of course, there's many other indicators out there. You don't have to use this one. I'm just showing you some of the great benefits behind it and some of the great points that you could use with it. If you actually go ahead and look and start adding more indicators, you could say, hey, here's kind of another list that I show on YouTube that we've got more indicators on here. Here's a Costco and here's a Netflix, where when you look at all of these moving averages, take a look. We've got, different days, a 10, a 21, 34, 55, 89, 144. Those are, by the way, mostly Fibonacci moving averages. And then you can see when they're spread out like fingers, that looks nice. But then when you get a little clutter and mix, not as nice. And then again, maybe you're starting to spread out. That could be nice. So what you're starting to do is look for a nice flow kind of like waves, and they're going. And look, they're all going short term on top of the next longer term, all together moving in sync. And that's what's showing a nice flow pattern to the stock. So anyway, I hope this helps, gives you a little idea to looking at these indicators and moving averages and seeing some of the great benefits. And, if you haven't used them before or you're brand new to charting, it's a good starting point to check them out and start with them, because using the other complicated indicators, remember where things are driven from, really price and volume. And in this case, this is a simple indicator, makes life easier. When you have too much clutter in your head, sometimes the decision-making process can be a little more difficult and complicated. So I appreciate you sticking with me. Thank you so much. Enjoy the rest of the week ahead, and I will see you next time.